Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Oana.
Okay, today we're going to do an update
Mm-hmm.
to the Las Vegas real estate market. We apologize. It's been a while since we put out a video.
Mm-hmm.
We've been crazy busy.
We have.
We've been incredibly busy. As some of you know, we did 2 weeks in Japan,
Mm-hmm.
and then we went to Australia,
We did.
and then we have just been literally working like all the time. So what we're going to do is we're going to jump in, going to do an update, tell you what's going on, what's likely to happen next 6 months here in Vegas, and then we'll talk about this review journal article about all the people that are moving to Vegas and
Okay.
how much money they make. It's actually a lot.
Mm-hmm.
And we'll get into it when we get there.
Okay.
All right. So let's start with this. This is the Las Vegas real-time market profile. So the top couple things you're seeing there, median price, new listings, are just kind of doing what they normally do this time of year. What I think is interesting is if you look at this per square foot, this next one down here, Juana, we normally see the market soften between May and October.
We do.
Okay.
But, we have been in this environment with very little inventory. And so the demand has been consistent.
Yeah, it's been consistent. But what's interesting is price per square foot's gone up a couple bucks, like almost 1%. You could round it, say 1% since May 17th to today. That's kind of unusual. What do you think about that? I mean, normally, we expect this, that could be noise, right?
Yeah,
It could be the mix of homes that have sold. It could be like more luxury homes and then more lower end homes that sell for more per square foot, like
Right.
smaller houses.
Right. I think for the most part it's noise because the inventory is so low. Everything has an outsized impact. So I wouldn't I wouldn't bet too much on that. However, the part that I think is noteworthy is that even if you say, well, it didn't really go up, okay, fine, it didn't go up, but it stayed consistent. It hasn't gone down. And I think that's really what's remarkable about it. What's remarkable is that we're bucking the trend, the historical trend, and like I said before, the reason for that is this persistent lack of inventory.
What's amazing is prices are higher today than they were 2 years ago today when we were told home prices would drop 40 to 50%, and it doesn't
Right.
look like it's going to happen. Some price decreased, went up a little, but that's maybe 1%. Though that line there they're pretty small changes that make that up. What's interesting here is inventory. We have a big chart on this. We're going to show you the whole trend. June 7th, which was 2 weeks ago, we had 2,453 homes on the market. You can see inventory was starting to increase. And then it fell off a cliff, and we're down to 2323. We've lost 150 homes just in our 130 homes. More have sold than have come on the market in the last 2 weeks.
Right.
That is also unusual for this time of year, right?
Well, right. Usually by this time of year, escrows are closing and properties are coming on the market, but not as many are getting absorbed because we're getting into summertime. Kids are out of school. People have already been settled. It's getting hot. Nobody wants to shop for homes. So there are all sorts of reasons why that usually is not what happens. However, with the lack of inventory, buyers are not going anywhere. They are staying in the market. They're staying engaged. And when something comes on the market that fits their wants and needs, they snap it up.
Okay, here's the inventory chart. Now, it normally doesn't look like this. Normally it looks more like a sine wave. The tops are always in October, November, and the bottoms are generally always in like April, March, April maybe, and even May. But a lot of this had to do with the COVID, right? Because you could see there were interruptions, and then, we had a lot of people who didn't put their house on the market, and then you had all the people flood the cities that moved into houses, right? And they sucked up a bunch of inventory.
Right.
And then that one big spike you see where inventory started to climb up was simply interest rates. It was only interest rates that caused that. And then interest rates haven't changed that much. But we still have, today we have like 6.8%, which is about what we had at the peak of that. So what about this logic that interest rates being high would cause a bunch of properties to come on the market? Even worse than the housing crash. and we're literally about, in Vegas, we have about 1/10 of the number of homes on the market that we had back then. And the city's like 30% more people. So we actually have like, maybe 7% of the number of homes available for purchase that we had 15 years ago.
Right. So interest rates going up does the opposite, right? It actually causes less homes to come on the market because the people who would sell their homes are looking at their 3% give or take interest rate, and they're looking at the 7% give or take interest rate, and they're saying, hey, I don't want a 7%, I like my 3%, I'm staying where I am. So they're not putting their homes on the market. So that's what's kept inventory low, right? Interest rates being higher than people are accustomed to having them has kept homes off the market because people don't want to swap their 3% for a 7%. And then you've got builders who take a long time to get spooled up. The cost of borrowing has gone up for them, so it's making it more difficult for them to build new homes. So they're not putting out as many homes as the market could absorb. So that's another factor with keeping inventory levels low.
We were told 18 months ago that there were these millions of new homes that the home builders had built. They were just waiting to release them. And we never saw, there were never any new homes that ever came on the market.
No, so, I mean, are there new homes? Of course there are new homes. But are there more new homes than the market can absorb? No. No, we certainly don't have substantial standing inventory. We certainly don't have a glut of new homes.
Yeah.
And as the numbers show, we simply don't have that much inventory altogether.
What's really interesting about this is if you look at the last year, that last dot, we have the same inventory that we had last year, and it never really increased. Inventory hasn't changed within about a 15% variance up and down over the last year. No. And we should have had a peak again last year, but we didn't. And that was interesting, even with high 6% interest rates.
Right, but again, that's not going to happen so long as people have these 3% interest rates. Now, at some point, people's needs will change substantially enough to force them to say, hey, you know what, I will give up my 3% interest rate and go out there and pay whatever the market is and get a new home because my needs outweigh my intolerance for the high interest rate.
Okay. This is the price per square foot chart. Now, this actually does not, if you watch the Crash Bros, they will make their own charts and they will make the home prices look like they went up like this. What they do is they format the years and they squish them together, so it makes the price appreciation look to be like exponential, right? This is the last 5 years. This is actual data. This looks nothing like a Crash Bro chart, okay? And what's more, if you look all the way over to the right, you see that little diamond, that was at 276, and if you go all the way over 2 years ago, it was like 273, 274. So we're actually home prices are higher. Problem is, people were saying 2 years ago, sell your house and wait a year or two and then buy it back for less money. And the home prices actually fell about 8% total, only to the fall, but home prices generally go down in the fall. The problem is, if you sold your house, you probably couldn't get back into a house because you probably gave up low interest rates. So imagine this one. You listen to a Crash Bro. You sold your house. Now you don't own a home. The home you sold you probably paid a bunch of taxes on it. You probably lost a bunch of tax credits. You're not building equity. Your rents have been going up for 2 years. And you can't even get back in the market because the house you got rid of would cost you more to buy today than it would have 2 years ago. And you would have to do it at a higher interest rate. You sort of screwed yourself. Like anybody who had a decent interest rate who sold their house is basically a loser. I would hate to be a Crash Bro who told people to sell their house and then, have a video out there where they're telling you to do that, because that's pretty bad advice.
Well, it's bad advice. The Crash Bros have millions of views and they're laughing all the way at the bank.
They are, but I think it's pretty sad. Look, this, other than that little hump right there, where it was strictly the last gasp of 3% interest rates before people were just panic buying, the markets behaved totally normally the last 4 years. Mm-hmm. It really has. It's been appreciating, but we've had inflation. Mm-hmm. So this has been a pretty normal market here. Now, this is what's interesting. Let's go down the market segments. Now, we do this market segment on every one of the videos. If you look, it's all the way at the bottom here. So those 4 quarters of the market by price. So you got the top median price of the top quarters, the middle of the top quarters, about 1.4 million. and then the two middles, and then the bottom. Which is weird is the middle of the bottom quarter of the market's 400 grand. Mm-hmm. But what's interesting is that this was just for the last week. So you could see that there were, like in the top, there were 66 new, 47 absorbed. And then the rest of them were pretty close. About as many came on the market sold. That's not what's really surprising about this one. What's surprising is days on the market. Okay, let's start with the bottom. 28. This is the bottom quarter of the market. 28 days on the market is pretty damn fast for stuff to, on average, to sell in 28 days. Mm-hmm. Okay, we just put a condo under contract. It was on the market like a little over a week, right?
Less than that, but yeah.
Less than that. It was a week, but it had multiple offers, and it was in a desirable area. Okay, let's talk about this. 35 now for the next two. Basically the middle heart of the market where average people are buying. The bottom of the market is generally investors. The middle of the market is just normal people, right? Getting a loan, doing whatever. 35 days, that's a little over a month. Normally it's 4 to 6 months. Mm-hmm. This is still a hot market. Like, homes are flying off the market.
Right.
And we also know that most homes get more than one offer. So you're not the only person making an offer on the house.
Mm-hmm. That's true.
Actually, the best thing you probably do is find something overpriced and go and just offer market value and say, look, this is what it's worth. And you don't have to compete with anybody if they're willing to sell.
If they're willing to sell, yes.
Okay. The top one, I'm going to let you talk about this because this is your domain, Miss Luxury person over here. All you see are multi-million-dollar homes, right? This is all you're working on. 56 days on the markets. That sounds to me pretty low for, because the median here is 1.4, but most of the houses you're dealing with are a lot higher than that.
Yeah, they're much higher. So here's the thing. No matter what the price point is, what I find remarkable is that people expect their home to sell the instant that it's on the market. When a home's been on the market for a week or two, people panic. And I go, why hasn't my home sold? It's really amazing to me. I think to expect your home to sell instantly, it hasn't even had time to be fully exposed to the market. So keep that in mind. Okay, so give your home a chance to sell. That doesn't mean that you should price your home above market value, but it means that you should give your home time to be reviewed by the people looking for homes in that price range, in that area, of that quality, and that sort of thing. So be a little bit patient. Now, if your home is not getting anyone looking at it, then definitely speak with your agent and see what's going on, because then there's definitely a disconnect. The market speaks even when there's no one speaking, right? Because silence is a form of communication. So if no one's coming to visit your home, then that's a problem. If people are visiting your home and they're not making offers, that's a problem. So those are things to speak with your agent about. As far as what's happening in the luxury market, homes are selling, and a lot of homes never see public marketing. They are sold off market either because the seller values privacy, or because the property that is being sold has a ready and willing buyer already, because agents are working with so many buyers. Like we said before, there are more buyers than there are homes. So agents are working with a lot of buyers, and when something is about to come on the market, they say, hey, there's this home that's going to be coming on the market. We're waiting for pictures or videos or whatever they're waiting for. Would you like to take a look at it? They'll take a look at it, and they love it. They make an offer that the seller is willing to accept, and the home never comes on the market.
What's funny about this one is we were talking about how people have this expectation, house sells in a week. Mm-hmm. 3,000 home sales ago, for you and me, let's call it 20 years ago, when a home was on the market 4 to 6 months, we would tell people, hey, we expect like in the first 30 days to, have like 10 people through the house. And if we don't, then we're going to have to lower the price. Mm-hmm. But we would never do that today. We would never say 10 people in the first 30 days. Like if you don't have 10 people in the first week, like if we're not getting calls within 24 hours of it hitting the MLS as agents, if they're not calling us, asking if we have offers or, if they can set up a showing, that's a huge red flag. And we never would have done that before. Like literally, we used to put it in the MLS, and then it would take a few days. And someone would call and say, hey, whatever. And then Now it's absolutely not like that. If nobody calls first 3 or 4 days, something's wrong. Like we didn't hit enter and it didn't actually go in or whatever.
Right. But there are times when no one calls. And like I said, the reason no one calls is because there's a misconnect between the property and the market. And that is a concern, and that's something to look out for. And a good agent's going to give you feedback as to what's going on, and you'll understand basically what's happening. So something that we don't talk about very often, and I'd like to kind of visit for a moment, is lots. So there are luxury lots out there, right? For people to build custom homes. Sometimes they're kind of even out in the middle of the city, or most of the time they are in some of the premier communities. For example, they're in Askaya, or maybe they're in the Summit, or somewhere like that, right? And these are pricey lots, they're multi-million-dollar lots and that sort of thing. And it's interesting to me because those do take considerably longer to sell because they have such a limited buyer pool. And that's what I want people to consider is, does the property that you're bringing to market have a limited buyer pool? So it doesn't matter what your price point is, it does matter if you have a limited buyer pool. And what I mean by that is, for example, maybe your home is $1 million, but it's in a neighborhood of $700,000 homes. Well, that's a very limited buyer pool, right? Because that home is over improved. Maybe your lot is, $2 million, but similar lots are selling for maybe 1.7. Okay, that's a limited buyer pool. So you need to kind of look and be in rapport. Make it make sense for the buyer to look at your property, whether it's a lot or a home. Particularly with homes, this happens too, that they're over improved for the area. So you're not going to have as many buyers willing to look because $1 million buyers are not looking in neighborhoods that are $700,000 neighborhoods.
All right. So what we're going to jump onto next is something else that happened maybe within the last 2 years is we heard a lot of a couple things. One was the casino jobs were furloughing people, and people would be out of jobs. They would sell their house. It would crash the market. And of course, we have the highest job growth in the nation right now, like today. Okay. But what's more interesting, and the other thing we were told is the new jobs being created, they're the worst jobs, the lowest paying jobs. And so we're not really adding high income people. Okay. So this was an article, it just came out in the Review Journal. More affluent visitors finding their way to Vegas and staying. This means they're staying. That means they're buying houses here. And we have some data on this. This is pretty interesting. But I'm going to go through the first one here. Tourism in Las Vegas is booming, with overnight stays in the city growing both year over year and compared with pre-COVID. We have 3 massive things that happened in the last, call it 6 months. Formula One racing. Right. We had the Sphere open up. That thing is awesome.
It's a year old now, yes.
We're going to it Thursday. And then Super Bowl.
Right. But we've also had something else happen. Vegas is very good at reinventing itself, right? Okay. And so we've had the Tropicana close its doors, which means that that there's a reduction in the number of rooms available, right?
Right.
So when there's less supply and equal or greater demand, what happens to prices?
They go up.
They go up. And now we're having one more place close its doors, the Mirage. So again, and the Mirage actually has a lot of rooms.
A ton of rooms.
Right. So that also means a whole lot less capacity. So again, it means higher room prices. When you're looking at the Las Vegas Strip, prices for rooms are astronomical. They're the highest they've ever been. When you're looking at food and entertainment on the Strip, it's the most expensive it's ever been. And there's no lack of people willing to pay those prices. I mean, we see that all the time. And so there's a lot going on in Vegas. We also have a lot of people moving to Vegas that are well-heeled, right?
Well-heeled. Right. They're not just coming here for the 49-cent breakfast, which does not exist. When I was a kid, my parents used to go to the 49-cent breakfast.
I don't know that you can get breakfast for $20.
No, I think it was at Lady Luck or someplace like that. It was literally like 2 eggs, some sausages, and like a piece of toast or something. But we would drive all the way to Lady Luck just for a 49-cent breakfast.
There you go.
And then they would play Keno or something crazy. So with what you're saying, Juana, the people that are coming here are actually high income. And here's another quote from the article. Higher income levels have also been detected among the people who are migrating to Southern Nevada. Now, if you didn't know already, median income here is about $78,000 a year, which is actually reasonably high. The reason it's actually higher than some states is because, remember, we don't have state taxes. So if you live here and make 78 and you live in California and you make 90, you actually make more here because you're not paying a lot of extra taxes. So you have more disposable income. The other thing too here is you can't buy a house in California if you make 90,000, but you can here. That the median income of new people coming here is the median income is 92,000. So remember, half of those are over 92,000 a year. So call it 40, probably 5% or more are making over 100,000. They make six figures. So remember, every person that comes here isn't buying a house. You still have people renting or people getting an apartment or whatever, but you still have a large number of people that are coming here from other states, including not just California, with incomes. Their jobs are more transportable, right? They're not necessarily working in a casino. Some of them actually work remote or, they have their own business that they can work wherever. And that's a really interesting trend. It's the reason why we have a luxury market that we didn't have 10 years ago. 10 years ago, maybe 14 years ago, the top 10% of all homes in Vegas were 310 and above. If you bought a house 13 years ago for 310, you were right at the 10%. 90% of all home sales were below that. Today, you're in the bottom 5% probably, or maybe 10% if you buy something at 310. It's the bottom of the market.
Right.
Those are mostly cash.
All right. So, it's good for Las Vegas and it's good for Nevada that people who are higher wage earners are moving to the area. Hopefully that means that they have a higher education too. So that helps our overall diversity of people as far as what they will expect from living here. And that's going to improve the quality of life for all of us because they'll expect maybe more arts, more culture, and that's good for everybody who lives here because that sort of demand is going to have to be met, and it'll be met for all of us.
Yeah, we're really bullish, obviously, not just because we work in the market. If we were trying to get more business from people, we'd tell them the market's going to crash. They should sell right now and call us to list their house because that's how we make money. We make money when you sell your house. We help you with that process, really good at it. Like I said, between us, we've done over 3,000 of those. But we own a bunch of rentals. We're not selling them. We work with a ton of investors who ask us every day, hey, should I sell my rental? We always tell them, don't sell your rental. We'll keep managing it for you. Just, you're going to let's raise the rent. Okay? Well, let's raise the rent next year. And then, we'll sell it in multiple years when they're all worth $1 million. So, but anyway, we just want to give you an update because, we've been pounding the drum of looking at data, presenting it, and then giving you our interpretation. And we've been damn accurate. There's some actually people that hopefully they'll put in the comments if they got this far in the video. They're like, hey, you guys actually were like the most accurate of all the people. And it's important for us to be accurate, be able to understand what's going on because people ask us these questions. And of course, we can't predict the future. No one knows what's going to happen. But to at least get better advice is what we think is going to happen, is what people want because they're trying to make a decision about their life. And their one purchase of a home or one sale of a home is the timing of it could be a big deal for them. And if it's the right time, then it's the right time. Right.
So it's the right time for you to buy or sell a home. Please consider using our services. We would love to work with you. If you are not in the Las Vegas area, that's okay. Give us a shout out anyway, and we'll help you wherever you are. We have a network of fantastic agents standing by to help you. We appreciate you watching. Thank you very much. We've missed you. Hope you missed us too. Remember to like the video, subscribe, hit the notification bell, share the video, leave us your comments, and thank you for watching. We'll see you on the next video. Bye.
Bye.